Let's face it, the crypto market is one of the most manipulated asset classes that there has ever been in human history. And 90% of crypto investors like you and me will lose because we are playing a game that we were never meant to win. And I know this is a harsh truth, but it is the reality that we face. And gladly, though, over the last 6 to 7 years, as I have been trying to maneuver my way through this manipulated market, I have come to realize that there are several different ways, tools, and strategies that you can use in order to give yourself a better chance at winning this rigged game. And today I'm going to start giving you some of those strategies and tools that I use every single day to win in this manipulated market. Now, if you don't know who I am, my name is Tyler Hill, and I'm one of the co-founders of the Crypto Strategy School, which services thousands of students every single month. And by the end of this video, you're going to know exactly how this market is manipulated and what you can start doing today to beat this rigged game. So we have a good bit to get to today, so let's stop wasting time. Now, before you can truly start to understand what to do to win, I need you to understand what you're up against. In the crypto market, we see two main companies that basically run everything. Okay, they run basically everything. These are centralized exchanges and market makers. And without them, realistically, there is no crypto. It'd be very difficult for people to get their money into crypto. It'd be very difficult to transact, buy, sell. I mean, anything. Everything would be almost nearly impossible without exchanges and without market makers. The sad part is, though, with all of this power has come a ton of greed. You see, the way that these exchanges make money is very interesting to say the least. The first way is via fees, and I think that's totally fine. Whenever I transact on an exchange, whether I buy, sell, or transfer, they're able to make a little bit by charging me a little bit of a transaction fee. Typical stuff, no problem. But in addition to that, that's where the market manipulation comes into place because they also make their money through things called counter trading. Now, no, this isn't supposed to happen. No, this isn't legal. No, this isn't good. But it is what they do. And I'm not just speculating. This has been proven to be done consistently by some of the biggest companies within the space. It just is what it is. And what this means is that whenever you bet the market's going to go down, they're going to bet that the market goes up because you lose and they win. And every single time, realistically, in the world of crypto, that you lose, someone on the other side is making money. And that oftentimes is either a market maker or a centralized exchange. Now, I know you may think, well, if I'm just in the game that's this rigged by the people who are in control, there's no way that I can win. But that's actually not true. There are certain things that you can start doing in order to win, and I actually break them down into 3 steps. And I have some good news for you. You've already completed 2 of them. When it comes to playing the game of manipulation here in the crypto market, again, a game I've been playing for nearly 7 years now, I've come to realize there's 3 key things you need to do. The first one is that you need to accept that there is no changing it. There's nothing that realistically you or I can do in order to fix it. It's just the game we play. And so instead of spending time trying to change it, spend time learning how to win in it anyway. The second thing is you need to identify how they do it. How do these people beat this game? Or how do these people rig this game? How does it happen? Because by understanding how it happens, you can then start to understand how to reverse engineer your own strategy into winning against what they're doing, which is what we're going to go over today. Because the last step that you need to take is to use tools and strategies to close the gap, to clear the playing field, to give yourself an advantage that 90% of crypto investors don't have, and why most crypto investors do lose. And that's really an insane fact. Over 90% of crypto investors lose money. And this very fact is actually, guys, the exact reason why we did create the Crypto Strategy School, which is linked down below. In the Crypto Strategy School, what we've come to recognize is that almost every crypto investor who loses money is because they have a poor strategy. And what we decided to do was to create a school to teach people how to build strategies, because what I want from all of you is for you to become winning investors, which I define as someone who is confident and someone who is consistent. And the way we accomplish this is by giving you all the tools that you need to create winning strategies to become winning investors. And so if you are someone who just wants to be confident, someone who can be consistent when the market's pumping and dumping, you know exactly what to do, and you can be confident in those moves. You're not freaking out and waking up grandma. What I want you to do is check out the link down below to the Crypto Strategy School, because the best part about it is, listen, if you don't see growth within the first few hours, I'll just give you your money back. That's how confident we are. So go check that out down below. But let's start talking now about what are some things that we can actively start doing in order to beat this market. Let's just start there. I'm going to give you two that are okay, and then we're going to get into the good ones. So the first thing that you can do is called whale watching. Okay. Whale watching is quite simply just locating individuals within the world of crypto who have a ton of money and just copy them. Because what you must understand is that these centralized exchanges, these market makers, they're humans and humans have friends. And oftentimes humans have friends in the same position as them. And so whenever you see people in the crypto space with hundreds of millions or billions of dollars, copying what they're doing is going to give you an advantage because they likely are in the know. They're going to know what's happening behind the scenes. They're going to know about all this manipulation. And if they're buying a lot or selling a lot, they're oftentimes doing it for a reason, and it's important to watch them. And so, whale watching is a fantastic way to give yourself some advantage. Another thing that you can do is look at a tool such as funding rates. Now, I'll give you a better video one day on funding rates, but the reason why funding rates, for example, work so well is because they allow you to see how optimistic or scared people are in the market. If people are willing to spend a lot of money, that means they're usually optimistic. Spend a lot of money betting that the market's going to go up. They're usually very irrationally excited and thinking the market's going to go up. And if people are very irrationally thinking that the market's going to go down, they're going to spend a lot of money to bet the market's going to go down. And so by getting an understanding of what people are doing, you can then try to guess what the crypto market's going to do in response, because it usually does the opposite. And again, although these are two okay ways of kind of going against the manipulation by just copying some of these manipulators or trying to bet against retail investors, there's an even better way that you can really, really get ahead of the curve. And that brings me into what we're really focusing on today, and that is liquidation levels. Liquidation levels are the number one tool in the crypto space, at least in my opinion. They literally allow you to act as a market manipulator to some degree and get an understanding of how this market's very likely going to move from a manipulative perspective. But before I can explain to you exactly what manipulation levels or liquidation levels are, I need to explain to you how they work and how you can find them and all of that. But trust me, it's worth learning exactly what happens behind the scenes in order to create what are called liquidation levels. Now, in order to understand liquidation levels, I need to give you a quick lesson on leverage trading. Whenever you leverage trade, what you're doing at its core is just borrowing money from a platform in order to bet that the crypto market's either going to go up, down, or sideways. Now, in the event of borrowing money, the exchange makes an agreement with you or the platform. They're going to say, okay, we're going to let you borrow our money. You have to put up some collateral. Of course, it's like a loan. If you're right and you make money, we want some of the money that you made. If you're wrong, however, and you're a certain amount of wrong, which will make sense in a second, we're going to take all of the money back that we loaned you, and we're going to take your collateral. So if you're right, there's big rewards for you. If you're wrong, you lose, and you lose a lot. And most investors will take that deal because they're so confident that the market's going to go in the direction that they think it will, until it doesn't. You see, most often what happens is that crypto investors are going to go in and make a bet that the market's going to go, say, up, for example. And guess what? The market will go down. And when it goes down a certain amount to a specific level, that's again where that exchange will come in and say, nope, we're taking everything that we gave you and your collateral. And that's called getting liquidated. And what's interesting is that there are actual levels that you can see with your own eyes that identify where people will get liquidated, which again means the platform's taking all their money away. And these are called liquidation levels. And the reason why liquidation levels are so important is because it is the point in which, or they are the point in which, these exchanges and market makers will try to force prices down to in order to cause you to get liquidated. And so what they will do is they will say, okay, let's give you an example. Bitcoin's at 80,000. You think Bitcoin's going to go to $85,000, so you bet it goes to 85, but the platform told you, if it goes to 77,000, I'm going to liquidate you, meaning I'm going to take all my money back and take your collateral. What these market makers and exchanges will do is they'll see that you will get liquidated if it goes to $77,000, and guess what they're going to do? They're going to deploy capital in order to force the price down to $77,000 to take that money from you, put it in their pocket, and then just let the market do what it's going to do. And in these instances where there are huge hundreds of millions and billions of dollars worth of liquidations at certain levels for, say, Bitcoin, that's when you can see these manipulators making hundreds of millions and billions of dollars in fees, counter trading, and of course, liquidation consumption, which means they're consuming all of the money that they're liquidating from your account. It's insanity. But the good part about it is that we also can see where these liquidation levels are. You see, these market manipulators have backend status or ability, so they can see from the backend when you get liquidated. But there are tools that have come out that will allow people like just you and me to be able to see where these liquidation levels are. And this is why I believe that this is the best indicator in all of crypto. Because what I have come to recognize is that these different platforms that allow you to see where the liquidation levels are give you an idea of where the market's very likely to move to when these big exchanges and when these big market makers force it down to those levels. So let me explain to you what we're looking at here. So here we are on coinglass.com, and this is where you can use the liquidation level indicators. Now, there are two different types of liquidation tools that you can use on a daily basis. There's liquidation maps, which is what you're looking at right here, and there's liquidation heat maps. Personally speaking, I'm a bigger fan of liquidation maps, so that's what we're going to focus on today, but they do basically give you the same information, just in a different layout. Now, when you're looking at this liquidation level tool, let me kind of break down what all these different data points are. So on the bottom, you're going to see an x-axis that has a bunch of numbers on it. These are prices, and they are the price of whatever asset you're looking at. So for example, right now, we are looking at the Binance Bitcoin versus USDT liquidation map. So this means these are all of the liquidation levels that Bitcoin has. So that means the prices that you see along the bottom are Bitcoin's prices. The red line that goes up through the top is the current Bitcoin price. So these are Bitcoin prices. This is the current price. So wherever this red line is indicates what Bitcoin's price is. So do you see how right now on the x-axis there's 84,486 and that's where the red line is? Well, that means that Bitcoin's price currently is 84,486. Anything to the left of this red line represents the prices that are below what Bitcoin is currently at. And anything to the right of this red line represents any prices above where Bitcoin's price is at, simply because this red line represents its price on the x-axis of prices. Now, why is this so important? Well, the reason that this is so important is because it then shows us how many liquidations would happen if Bitcoin's price from right here went up or if it went down. Because you see these bars, these are liquidation levels. And these bars tell us at each one of these prices just how many liquidations would happen. This red line and this green line just show a total accumulative sum of all these liquidations. Meaning that if I'm looking at Bitcoin's red line, that means anything in the red is how many liquidations will occur if Bitcoin's price goes down. And if I'm looking in the green, this is how many liquidations will occur if Bitcoin's price goes up. I can hover over these bars and see them. For example, I can see here, cumulative long liquidation leverage would be 381 million at the price of $83,758. That means if Bitcoin's price goes from where it is currently, 84,000 to 83,758, there will be over $381 million worth of liquidations that will occur across the entire crypto market. Of course, immediately finding its way all the way into the pockets of the market manipulators. If I go further back, for example, all the way back here, there are over $2 billion worth of liquidations that will occur if Bitcoin, say, goes to 80,000. And just like to the top side, if Bitcoin's price, this red line, goes up to, say, 87,853, we will see over $1.6 billion worth of liquidations in that instance, in which, again, that feeds the market manipulators. And what happens historically in crypto, okay, now that you understand what you're looking at, what happens historically in crypto is crypto assets prices will go in the direction of the most liquidations or the easiest to access liquidations. So whenever I'm looking at this crypto market, say from the 30-day perspective, so a little bit more of a zoomed out time frame, I'm going to look and say, okay, where are the closest and highest amount of liquidations? So I would look and say, all right, you see right here how right on top of us, I mean, right above Bitcoin's prices, there's over $1 billion worth of liquidations. It's very likely that Bitcoin's price pushes higher to try to hit those liquidation levels. Now, of course, there are other things you should factor in. General market sentiment. If everyone's bullish right now and you are seeing some buying power into the market, yet there's still a ton of liquidations right here, yeah, it's probably a good idea to try to push yourself or to assume that the market's going to push up to those liquidation levels. And so, yeah, you can factor in obviously a bunch of stuff, but I'll save those extra, confluence indicators for the future. I want to focus on liquidation levels because, again, just looking at this in the short term, I would think, hey, There's a ton of liquidations that will happen. If it just goes up another couple $1,000s, I think there's a good chance that we do see it push up there. So I'm going to go in and either say bet that it's going to go up or just don't short the market, right? But in general, what I could also say is look, like if we go down to the 1 day liquidations, I can say, well, even though we very well might push up a little bit higher to continue liquidating those people, there's a ton of liquidations below us now. I mean, if we see again Bitcoin's prices go back to 82,000, which is only 2,000 away, we're going to see over $2 billion worth of liquidations. So what I'm going to do is say, listen, yeah, we might continue a little bit higher to liquidate those people that we saw here on the 30-day, but I'm not going to be buying super big right now. I'm not going to be opening up huge leverage trades right now because the reality is that while all these liquidations are below us, at any point we just might see Bitcoin's price absolutely fall. So I'm going to bet a little bit that we're going to go up, but I'm not going to bet much because I need to be very careful about these liquidations. And that's how you can start to play the game here and looking at these liquidation levels to decide what you do. Here's another example. Let's say, for example, just hypothetically, there were no liquidations below us. The market's been falling, falling, falling. Everyone is scared, and there's no more liquidations below us. I mean, just $10 below us, right? And this red line, right, that's up here would be way down here because there's like no liquidations left to the downside. But there's $1 billion worth of liquidations above us. So that means this green bar would be really high. So the green bar would be way up here. The red line would be way down here. What you can reasonably assume is that the market's going to start going up. And that Bitcoin, in this example, would start going up in order to go liquidate those billions of dollars worth of leverage traders in that instance. The market will generally move in the direction of the most liquidations or the most easily accessible liquidations. And that's how you can start to, again, apply this to your own strategies and use this for confluence. Because let's say, for example, in that hypothetical I just gave you, Bitcoin was starting to give some bullish buy signals, like buy signals all over the place. Hey, Bitcoin's falling too far, too fast. Buy, buy, buy. And I went look at my liquidation levels, and there were no more liquidations to the downside, but everybody above us would start getting liquidated easily. I would start buying because my indicators are saying that we're very likely to see Bitcoin's price go up. And now my liquidation levels are also saying we're very likely to see Bitcoin go up. I'm going to start doing some buying. And this allows you to start using the tools of the market manipulators to pair with your own analysis, with your own trading, and basically be something of a market manipulator yourself because you are making money off the backs of people losing. But the reality is they're going to lose anyway. And so we might as well give ourselves who are in the know the best advantage that we possibly can. And so look, I know it can be a little confusing. And I know all of these things that we've gone over today, they might feel a little bit aggressive. They might feel a little bit complicated. But the reality is that when you just start using it, it gets much simpler. So I want you to do two things. The first thing is I want you to go to coinglass.com after this video, and I want you to go to liquidation map, and I just want you to study it. I want you to watch where these liquidation levels are and then watch what happens. You can look at things like Bitcoin, ETH, Solana, XRP, Doge, BNB, and several other cryptos, and just start watching to see how the prices move. Because what you'll come to realize is these prices move in the direction of these liquidations all the time, and you really start to see the effectiveness. And then once you're really ready to start using all of these things that we've talked about today, go again, check out the school down below. Because this sort of strategy, this manipulation-based strategy, is just one of the many that we teach over in the school to help you become, again, confident and consistent. So go check that out. And if you're somebody who just wants something quick, head to the link down below. And I just recently released a 14-day crypto masterclass where every day for 2 weeks, I'm going to send you an email breaking down lessons just like the one that we did today. And matter of fact, there's a guide to market manipulation in that 14-day masterclass if that interests you. But overall, I hope this video was super helpful. Learning how to counter the manipulation in the market is the very reason why I'm still alive in the market, why I've been winning and making money for several years. And it's extremely essential that you understand how it happens, why it happens, so that you can counter it. And so use this today. Head to CoinGlass. Go start looking at the liquidation maps because, again, they changed my life, and I genuinely think they can change yours. Don't forget to check out those links down below. And if you have any questions at all, by the way, about how to sign up for the school, how to get the masterclass, send me a message on Instagram, which is linked down below. Just send me a DM, and I'll send you a message as soon as humanly possible. But I hope you guys did enjoy it, and I can't wait to see you all in the next one. Peace out, everybody.